You're welcome. So real quickly today, we're going to talk a little bit about perfection and how it is, quite frankly, the elusive piece that every person I've ever known thinks they can master. And I guess after doing this for 20 plus, almost 25 years, I came to realize probably, hopefully earlier than most and not too late, because continuing to be successful as a trader in this business, but perfection is not something that is attainable in life. So why should it be in your trading? And that's really the goal of this discussion, a real top-down view of why perfection should not be something that you're shooting for. So again, I think that from working with a number of traders over the course of the last 5 or 6 years, that perfection is again something that most people come in thinking they can attain, and I think it is very much a sickness and a virus. And I'm going to plan to walk you through how to get away from that sickness of seeking perfection. And if you will, our goal here and our payoff is to help you to attain the medicine that will allow you to run your trading as a business. And we say here at the Market Profile Trading Academy, trade less, earn more, and that's the TLEM that you see here. That is something that we really believe in. Trade less will help you to earn more. Who am I? My name is Matt Davio. Matt Davio. Davio is actually the correct pronunciation. Terry announced it correctly, but it's been bastardized. I grew up in Midwest, Detroit, Michigan. I've lived in Bend, Oregon for the past 13 years. I've been trading for nearly 25. I ran my own fund. It was a short biased equity option fund for about 4 years. I ran that 03 through 06. Marginal success. The big payday would have come obviously 08, 09, and we were not in business any longer. We got dribbled to death with the lack of volatility there, 03 through 06. That was one of those periods, much like we're in today. Matter of fact, 2010 through 2013 has been a similar low volatility environment. I worked for Peak 6 and with Parallax, both trading side pocket arrangements with both those funds. I've been involved with a few startups here in Bend, Oregon. I love the 4 seasons that Oregon offers. We have sun, yes, sun out here in Central Oregon. We're on the high desert. We're on the east side of the Cascades, which leads to 300 days of sun, and that's why I moved out here. 4 seasons, very mild, very temperate. A lot of golf, a lot of fishing, a lot of hiking, biking, skiing. Those are the things that we like to do as a family, along with all sports. I've got 4 kids aged 10 through 16, and I am the founder of Market Profile Trading Academy. So today, perfection again. How is this killing your trading? Let's start pretty simply with a couple foundational beliefs that I have. I am not a scalper. I don't believe in scalping. I just don't think it fits my personality. There are people that are successful with it. However, I think it takes a great deal of discipline to trade 100 times intraday and be able to protect yourself on the risk side becomes tiresome. And I think most people don't and can't scalp. So let's just set that premise from the beginning that I don't believe that scalping is a long-term strategy to success. Again, unless you're going to program a computer and tell it what to do and how to do it, and even that is fraught with all types of risk. So we're going to talk a little bit about understanding risk. Trading is not a perfect game. I don't believe, again, in picking tops and bottoms. I think it's difficult. You are going to have winning trades and you are going to have losing trades. You will never get to the point where you don't have losing trades. You will have to get used to, as we say in teaching our partners, you have to get used to taking some level of heat, having trades go against you. And on that same side, you have to get used to sitting in a trade, maybe that is going your way, but it hasn't achieved its time or profit element yet. So taking heat can be looked at on both levels, and that you really are going to be early and you're going to be late, and trading is really much like life. It's a living, breathing entity. In my view of the markets, it's run by people. So it has an inhale, exhale, and that is definition of trading to me. So I've got a chart here, which is a pretty recent chart. I actually took this picture yesterday using Window Trader. And this is looking at about 2 months of trading. However, it's only going back about 6 weeks. The last couple don't show here on the left side, the last 2 weeks before that. But the profile is histogrammed here to the right. You've got a market profile, daily profiles, and overnight profiles shown on the last couple days, sessions. And really what I'm trying to show here is this real top-down, that where is the perfect entry on this chart? It depends on if you're long, depends on if you're short, depends on if you're making a spread trade. So it all depends on a lot of different things. And I guess the real reason to show this chart is there is no perfect top or bottom in a chart at any time, anywhere on any asset class. So you really have to get used to how then can you look at how can I then trade if Matt's telling me there is no perfect entry or exit. Whoops, excuse me. So the psychology, again, I think it starts from an early age, especially here in the United States. We teach our students, get 100% and you have a perfect grade. Get an A+, and you will be the valedictorian of your high school. Continue that, and you'll be the valedictorian of your college, and then you can go and get your degree at Oxford after that. So it's all about being perfect from the way we are raised and raising our children. When in fact, I think as people, we learn as much from failing quickly as we do from, in theory, trying to be perfect. Because again, perfection is really an unattainable feat. So I think especially when you look at trading as a business, this is where people get hung up. They want to be able to categorize. They want to be able to put everything into nice, simple buckets. And if trading were that easy and that simple, there would be a lot more people doing this. I think trading is, people always ask me, do you teach your children about it? And I absolutely do if they show interest. But it is one of the most mentally draining, physically draining professions that I can imagine. I'm not a doctor. I've sold medical devices as a little bit of background. I've seen a lot of doctors, and having that type of focus, especially in microsurgery, is something that I would probably associate with scalping. I think perfection is not possible, whether you're a doctor, whether you're a plumber, whether you're a car mechanic, and whether you're a trader. So again, just setting kind of a premise that I think a lot of people come into this business and into this game thinking that, well, I'm a pretty smart person, I'm an engineer, I'm a doctor, I want to categorize, I want to bucketize everything, and I'll be successful just as I have been in my other lines of work in my life. But the reality is, most people aren't used to losing as much maybe as you will, and that's not a bad thing. It's just that most people don't understand the psychology and the gamesmanship that goes along with playing a game. And trading is in my opinion, one of the greatest games. I grew up playing backgammon with my father, gin rummy. These types of percentage games are better tools than really anything that you can learn from past experiences. You've got to be able to kind of have some tools and some gamesmanship to even step into this sport. And trading is very much a game, very much a sport. And you have to get good in your head in getting over both good trades and bad trades, and managing those losses, and how you win and how you lose is important. One of my favorite writers, and he's a trader, Nassim Taleb. He's a longtime trader. He traded with Soros, traded kind of opposite way Victor Niederhofer did. Niederhofer tended to sell a lot of options, puts mostly, and every 10 years or so he blows out. Talib, the way he traded was really very different than most people ever would want to, and he takes it to the extreme of trade less, earn more, in that he would go out and buy a lot of very cheap options, whether they were indices or individual stocks, and he'd buy cheap puts, cheap calls, and just basically say, I don't know when the market's going to move, but I do know that it's going to move, and when it moves, I'm going to capitalize on that. That is the way that he made his money. Believe it or not, he'd lose probably 90% of the time, and those 10% wins would not only pay for his 90% losers, but it would also give him profit. So there's a lot of ways to make money in the market. I'm kind of talking extremes, but I highly recommend you read Talib's books. He's got a book on options theory, options pricing, that he wrote in the early to mid 90s that I think is a fantastic read if you want to learn about options. But more importantly, read his non-trading books, which are Fooled by Randomness, The Black Swan, and most recently Anti-Fragility, Making Order Out of Chaos. Those books are really, they really drive home kind of the same common theme, which I do believe in, which is doing less and less intervening, whether you're a government, whether you're bureaucracy, whether you're a parent. All are kind of, letting things have their natural course are very important. So, and they also help you to deal with failing quickly. And that's something, again, as a trader, you'll hear a lot of people talk about. Cut your losses, let your winners run. Easier said than done, but kind of the same theory here. But I really recommend you read his book. So I've got a book plug here for Mr. Talib. Getting over the hump. Again, finding your time frame, finding your comfort zone. Depends on how often you can be in front of the screen. I have, as a professional trader, I am in front of my screen if I want 10 hours a day, but I choose really to focus on longer term time frames, whether it's a day to 3 to 4 weeks. It's kind of my sweet spot. Find the area and the time frame that works best for you. Again, I'm not going to trade 100 times a day. It's just not going to be in my makeup to do this every day. Define your losses before you start trading. How much are you willing to risk of your trading capital? And again, trading capital is different than your overall capital. Your last $50,000 should not be the only money that you're trading with, or should not be the only money that you have behind you. So I always recommend people be well capitalized, understand what your risk is, how much you're willing to risk on every trade, and be good with it, because you're going to lose on trades. So if I know that I have $100,000 to trade with, and my maximum drawdown per trade idea is $2,000, then it becomes a much different game knowing that I've accepted that $2,000 loss. And when you have winners, you need to let them run and push those trades. And we'll talk about that a little bit. So, a couple tools that, again, I like to use when I'm using the Window Trader platform is, again, we talked about this earlier in the charts previously. I've got a histogram here which shows the market profile strength. You can see this wide portion right here at 33.75. And this was taken yesterday by the fact, so this is real relevant if you want to go back and look at your charts. This is going back a full month of trading, and there's another month to the left here. If I had shown all that volume from the left side here, you would actually see a market profile to the bottom here, which shows a even larger area of control for all of you market profile technicians down below around 32.25. And we trade today right here around 33. I think we closed right around 33.70 plus or minus, and the NQ. This is the NQ. And what I was looking at yesterday was we had a big area of congestion in a bracket, if you will, over the last 3 days after the Janet Yellen meetings. And I was looking for a break. Quite simply, this is a bracket. I was looking for a simple break after this amount of time, the 3 days spent here, and we ended up getting it. What happens is, and my target was right down here to that 33.75 area, which we proceeded to hit today, And we actually even traded today down here to this 33.58 area. And that's your next level of support. So trading is not all about getting every piece of every move, but if my initial target was 33.75 and I had sold 10 contracts, maybe I take off 5 here and look to pick up the other 5 once we get down into this 33.55 area, which again we still haven't hit, so maybe we're pressing the trade, letting it run a little bit and letting it go to that area. So being not perfect is a must in trading. This is really important, and this is where I think scalpers get caught up in, well, if I can just do 100 times at 100 points, I'll make 100, I'll make a total of 100 points. Well, why not try to take one trade and take a look, a bigger view of the market? Let's say your nominal range has been somewhere in the 1 to 1.5% on the NASDAQ, 30 to 45 points. My goal as a trader is to take out anywhere from a quarter to a half of each day and each week and each month and each year. So if we're 30 points wide today in the NASDAQ, as a matter of fact, we were about 40 points wide, 33.58 to 33.98. And 40 points is that total low to high range. A successful day for me would be 10 to 20 points. That's a great day if I'm day trading. And if I do that every day over the course of a week, and just say 30 points every day is our range. So if I end up taking 10 points, 15 points, 8 points, 12 points, and then lose 3 points, at the end of the week, I've taken out a good 25 to 40% of the market's range. And that's really the way that I like to look at the market. It's not a linear business. It really depends on how wide the market is. And if you're not able to take wider ranging trades, you're going to end up just beating yourself up psychologically. In other words, you'll watch 3 scalps work out the way you wanted, another 3 you lose, and then you break your rules and because you're just thinking it's going to run more. The problem with scalping is you just won't get the long, big moves because you'll never be in them because you're only trying to get a half a point to a point, time and time again. And again, the jiggles are just too much for me to handle and maintain psychologically. And at many times, when the right trade comes along, you're going to not be there to press when you need to press. So, the trend is obviously important. Are you trading the trend? Are you trading counter trend? Those are key things when you're looking at the markets. So let's take a look. Lots of entries and losses. Winners are small, right? And this is a scalper's world. I'm tired of just looking at this chart, so let's take a look at this chart. This is a perfect example. Yesterday we were just back and forth, tightening, and the profile was just strengthening, or rather it was looking like it didn't want to go anywhere. And so why try to guess until it breaks out of this range? And you could set a sell, so you had one here on the green line, and you could even press another one when it got below the value area from the day yesterday. And that worked out very nicely. And again, it came right down into that high 70s area. So instead of trying to get every little nook and cranny out of these little moves in here, which really, when you look at this range here, 34.18 down to 34, let's call it 07, this is about a total 12-point range. And then, so this was 12, this was 8, this was 4, this was 3, this was 2, this was 1, this was another 2, and then it finally broke. If you were trying to get every little wiggle in there using some type of tick chart or time frame chart, you're just going to get your hand chopped to death. You're going to win one, lose one, win 2. So why not just sit back and wait for the bigger move to come via the profile and how it's set up? And that works out very nicely over time. So pick your spots. Even the best traders I know on the scalping level they just don't have the stamina to handle that type of movement. So pick your areas. Don't be a hyper scalper. Define your loss right up front. Develop a plan. Stick with it. And again, if you define your risk and your setups right from the get-go, you will be successful at this. So always remember, trade less, earn more. This is here's where people struggle. They struggle with the patience to do this. But if you can be patient and wait for the right setups, like in any business, 20% of the time is where you're going to make 80% of the money. And it doesn't matter whether you're, again, a plumber with a couple big customers and the rest are just kind of out there, or you're a trader. You have to wait for the market to come to you. You are a professional stalker. And I say that in all seriousness and justness, that our job as professional traders is not to trade necessarily all the time, but to find the areas where we know what we will do when price gets there. And the market profile is a tool, and the Windows Trader product is a tool to help you as a trader define those areas of risk, support, resistance, where the strong hands are, where the weak hands are, and that's where you need to focus.